It says we are now streaming live on Facebook, my man. I'm just going to check and make sure. And then I'm going to share it.
Yeah. We up here.
Awesome sauce. I'm just going to share it to my page real quick.
Yeah, that's what I'm about to do right now.
Good deal. Good deal. Good deal. So everybody come on in while Mike is sharing it. Come on in the room. There used to be a gospel song, come on in the room. Mike, you might be too young. You might not know that.
yeah, that's I'm too young for that. I remember
the Mississippi Mass Choir sung that.
Oh, really?
Yeah. So, but come on in the room, guys. I'm going to be monitoring it on my cell phone so I can see if you have any questions, but type below where you're watching this from. I promise you, this is going to be one of the most exciting Facebook Lives that you've seen in a freaking long time. I promise you. Mike, I see you got it shared.
I remember that song, Melody from Heaven.
Oh, Kirk Franklin.
That was the jam.
Melodies from heaven. Like, I always want to be a singer, man, but that ain't my gift. But I still try.
Look, ain't nothing wrong with that.
It is what it is. All right, we'll go ahead and kick it off. You ready?
I'm ready.
Awesome. Hey guys, welcome everybody. My name is Solandia Hammond, affectionately known as Sue Ham, baby, with SueHam.com. And as promised, we are here again with that free game. And this time I have none other than Michael Big League McKenzie. Mike is a loan officer, an investor, a father. He's active in his community. And one of his missions is to ensure people have home ownership, people save to invest, so that they can change their legacy, so that they can pass down generational wealth. Mike, Big League, what should I call you, brother? Welcome to the show.
Hey, what's up? You can just call me Big League. That's what everybody call me.
Big League. So tell me, where did the name Big League come from?
So my big bro, DY, he's actually a radio station owner here at Hot 97.9 in Raleigh. He gave me that name because when we was doing business at his record label, I always used to had that go hard or go home mentality with everything. He was like, man, you always thinking big league. And I was like, man, that's what it is. And he was like, man, this big league. So that's how it started.
I love it. And you know what I like too is when we give ourselves those type of taglines, those names, we gotta live up to it because people are gonna hold you accountable.
Oh yeah, they do. They do. They do.
Good deal. Listen, man, I found you in a Facebook group, and I was just watching how you move, and we talked, and I was listening to you, and I was like, this man knows his thing. And I'm always attracted to people who are authentic and who care about the population and who care about lifting people out of poverty. And so I was like, I gotta have you talk to the people because there's so many people that are misinformed when it comes to getting financing, when it comes to getting their credit together. And so if you don't mind, I just want us to kind of have a conversation. I'll throw some questions out there. And if you feel
that's cool.
Cool. So it's informal. We just at the kitchen table, just in separate houses right now. Okay.
Okay. I have my tea with me too.
I love it. I looked at your Facebook page a couple of days ago, and you said something to the point of you have to have money when getting financing for a loan. I think that's what it said, or because a lot of people think that you can just, I guess, come secure a loan and not have any funding at all. Can you speak to the audience on that?
Yes, I said it was like you have to have money to buy a house, and they kept going saying the same thing. When it comes to real estate, buying a house, it's not like buying a car where you can do no money down. You must have money, even though there are down payment assistance programs out there for first-time home buyers, guess what? You still gonna need money for your earnest money deposit, your due diligence deposit, your appraisal, your closing costs. So you're going to need money to buy a house. There's no way to get a house. Well, there is a way to get a house for free, but that's like another course. But there's like, you gotta have money to buy a house to get in the game.
Talk to us about closing costs, because a lot of people think that if, because FHA has a great program where you can put down 3.5%. The VA, I'm a veteran, where it's 0% down. You pay the earnest money, but you don't have to put a down payment. But a lot of people fail to understand that there are closing costs associated with it. So not only is there a down payment, there's a closing cost. Talk to us about closing costs. What's involved in that? And typically, what does it, is there a price range for it?
So my rule of thumb with closing costs, it's gonna be roughly, I tell people all the time, like 5,000. Think 5,000 minimum. Closing costs is going to include your lender fees, so origination charge, and that fee is pretty much the lender. That's how the banks make money. Mm-hmm. You might have a discount point in there that you are paying. That discount point is really going towards the cost of the rate. I hate the name discount point because it sounds like it should be off, but it's not. Then you have the attorney fees. The attorney fees, they can control that. Then you have lender's title insurance. Lender's title insurance, that's the fee that the bank charges you. So let's say there are any liens on the property or the bank, that's the insurance on them to protect them. Mm-hmm. Then you have your prepaid, such as your taxes and your homeowner's insurance. That's included in the closing costs. And then you have you're gonna have your escrow account. If you create an escrow account, you're gonna have, the 3 to 8 months of the escrow that they're gonna take out. And then you're gonna have the most important thing on a loan disclosure CD, is the line H. It's the homeowner's insurance. That pretty much protects you. If there are any liens on it, it protects you where you don't have to pay those liens. And that's really about it. So closing costs, it's there. It's always going to be there. Even if you refinance a house, you got to pay the closing costs. The attorneys still have to get paid. Got to pay the taxes. But there's nothing wrong with closing costs. Just be prepared to pay it. I tell people, hey, just think $5,000 worst case scenario. But the trick is how you get your closing costs paid. You can ask your lender to pay it, to give you a lender credit. You can ask the seller to pay your closing costs. You can also ask your real estate agent to pay your closing costs. I know some of my agent friends are gonna be like, no, you didn't. Come on. But some of my agents on my team, they do it. Like I have seen them do it if the numbers are tight. But those 3 people can pay your closing costs. So yeah.
I just learned something there. I had no idea. I never knew that agents had the right. They had the ability to actually pay closing costs. So let's break this down for people that are listening, right? Let's just say hypothetically, I'm buying a house for $100,000 and I got to put 3.5% down, which is $3,500, right? Then my closing costs, you said typically about $5,000. So it would be safe to say I need about $8,500 to come to the table to close that loan, give or
Correct. Take. Mm-hmm.
Okay. And the great thing is the lender could pay it, family could pay it, the realtor could pay it. I just learned that. My realtor friend Maggie Cooper, stay tuned. And also the lender can pay it.
Yeah.
Good deal, good deal. We failed to mention, let me just put the disclaimer out there, guys. This information is for informational purposes only, entertainment purposes only. I, myself, am not a CPA or an attorney, nor a lender or a financial advisor. Mike is a lender. Mike, what's the company that you actually work with?
So I work for New American Funding. Mm-hmm. And my NMLS number to stay compliant is 1683358. I work for New American Funding. Great company, phenomenal company.
Now, I wanted to ask you that because I've seen and I've often wondered, why do lenders give their number? What was that? You said NLS number? What was
NMLS.
Yeah, and I was wondering, is it because there are a lot of scam artists out here that say that they can do loans for you, but you just said it was for compliance. So can you break that down a bit?
Yes. Yeah, so for one, there are a ton of scams. If you're like on Facebook, it's a whole bunch of people saying they can lend you money. If that person doesn't have an NMLS number, kind of do your homework on them. I know with commercial lending, you don't really need a NMLS number, but if they're talking about lending money, check out their reviews. But that's like knowing that, hey, this person is licensed. And compliance, they just want to make sure that we tell people, let them know that, hey, we are professionals, we are licensed. Because compliance, they could watch this video. Hopefully, they got their pen and paper to take notes, though.
Come on now. Come on now.
Yeah.
Brother, talk to me about closing a loan in 14 days.
Oh my goodness.
Talk to me about that. I'm on my water while you do that.
I gotta give a it's my team. I have an amazing team. My loan partner Kay Grice, she is phenomenal. She's phenomenal. Then my processor Lacey McAllister. Those ladies, they pretty much get these loans to the closing table. It's all of them, and then my underwriters, my funders, like everybody's just working fast paced. And that New American Funding, we have a machine. Wow. Behind this, but pretty much the way you do that as a loan officer, I get everything up front. Everything I'm talking about. As soon as I pull credit, I'm like, hey, give me a letter of explanation of this. Give me your bank statements. Why is this in there? I'm just pretty much underwriting the file before the underwriter does it. And the way how I learned how to do that was just having conversations with my underwriters. Because I said, hey, how can I make your life easier? They told me, and I was like, all right, cool. So my underwriters, they love every time they see my file, they love it. They love it. So I get everything up front. We do a rush appraisal.
Oh wow.
A rush appraisal. And with New American Funding, we're like number 8 in the US as far as private mortgage lenders. So we're a big company. So we have those relationships with those appraiser companies. So when they see a New American, they see dollar signs. So we do a rush appraisal. Appraisal comes back like in a week, so maybe even, really a week, sometimes 7 to 8 days. From there, we order and title immediately. The title work comes, the file comes out of underwriting, and pretty much like it's probably like maybe, I want to say maybe like 5 conditions, 3 to 5 conditions. And most of the time it's like, hey, get the homeowner's insurance. We're still waiting for the title, waiting for the appraisal to come in. Tell the borrower to sign this credit letter. Because I've never seen that credit letter out. But pretty much it's fast paced, and the buyer, they have to be ready to do those type of loans. But I do a ton of them. Like I'm doing one now, actually 2 now.
You're my hero. Because I like to move swiftly. I believe success loves speed. And I think that was a great point you just dropped. So buyers, current buyers and prospective buyers, if you are looking to get in the game, purchase your home or purchase an investment property, be prepared, have your stuff together. So when he's coming back to you and stuff like your W-2s, if you're working, if you're self-employed, your taxes, bank statements, and whatever it is that he needs, have those things ready, the contract. So what should I do? I'm just going to say, what should I do if I'm out here and I'm looking for houses? Should I just go look for a house first, or should I come to you first and get a pre-approval?
So you definitely want to talk to me first, or a lender, but preferably me. So talk with your lender first with me. You want to be ready out in this market, because right now what's going on in the entire United States, it's bidding wars, and you can't be out there like window shopping. You got to be ready to play ball. And so you want to talk with me. When we talk, we're not going to pretty much go based off what you tell me. I want you to have all the documents ready. You want to have, if you're self-employed, 2-year tax returns ready to go. If you haven't filed your taxes yet because you think about writing off stuff, get with your lender and say, hey, can you talk to my CPA? I want to make sure I'm doing this right. A good lender will do that. That's what I do, and that's why like I always get self-employed people in the house. It's just the easiest thing. It's just a conversation with their team. Um, but yeah, you want to have all your ducks in a row when if you're self-employed. Tax returns for the last 2 years, profit and loss for this upcoming year to date. You want to have what? You want to have your bank statements ready. You want to, if you're going to be using your business bank account, you want to have that CPA letter stating that, hey, um, by using the funds from your business bank account, it's not going to ruin your business. You want to have your personal 2 month bank statements ready if you're going to be just using the personal. Um, for my W-2 people, my 9 to 5ers, you want to have your W-2s for the last 2 years. If you're thinking about going USDA, you want to have your tax returns filled out for the last 2 years. You want to have your personal bank statements for the last 2 months, showing the bank statements where the money. A lot of people, they'll send you a 500 bank statements. We just care about the bank statements that have the money in there. You want to have your ID. You want to just be glued to your email, because the email is very important, because the lending company, I like to call people, but you know, my team, they'll email you first. Like I love to call, but they'll email you. So you got to be glued to your email. Um, Pretty much that's really about it. And just be ready to, whenever you get that pre-approval letter, be ready to play ball, and just don't have your down payment. Just don't go in thinking, okay, I'm gonna get down payment assistance, or my lender's gonna pay my closing costs, or my realtor or the seller. Don't go in with that mindset, because you could bite yourself in the butt. Go in being ready to play ball. And in these markets, you probably like sometimes have to have a little extra money to play ball with putting more or paying over asking price. But the trick is you want to throw more at that earnest money deposit. That's what that's how a lot of people win deals. You throw that money to that earnest money because the seller gets that.
Mhm.
Um, throw that, throw that at them, and the more money, I'm telling you, they'll take your bid. They'll take your bid all day.
Yeah, because I was just reading in different people in the Facebook group talking about how they're paying $20,000 and $30,000 over asking price because they're in a bidding war. Because right now it's a seller's market. Um, a lot of foreclosures are not happening because of the moratorium. It's delaying that process. And so what's on the market is what's on the market. It's not like a whole bunch of stuff is coming out. And especially like if you're looking at uh, duplexes, triplexes, and quads, man, that supply is very limited depending on where you're looking. So you said something about USDA loans. That takes me back to a question that we said we would address tonight. Talk to us about the type of loans. What's your favorite loan? VA loan, FHA loan, USDA, conventional? Can you talk to us about the differences between the types of loans?
Yes. So my favorite loan is all of them. And I
Come on,
say that,
everybody.
yeah, it's all of them. Because I'm helping a family. I'm helping that family, that investor. So I love all of them. It's they're all different. Um, so with government loans, these are FHA, VA, USDA. FHA, you have to put 3.5% down. VA, you have to be a veteran or a spouse of a veteran, married spouse of a veteran, and that veteran has to go on the loan. Um, USDA, you have to move into a rural area, but USDA, they have income limits and they have a DTI limit of 41% max. Credit score can be 580 minimum for both of those, for all three of those. Then you have conventional. Conventional,
Can I hold you right there? Because that was actually a question from one of the persons I'm looking down. They wanted to
okay.
know the credit score. You said 580 for
Yes.
USDA, FHA, and VA.
Yes.
Wow. Okay.
But I'm gonna be honest now. Don't come to no lender with, hey, I got a 580. My realtor say I can get a house with a 580. Don't do it, because it's very expensive to try to buy a house with a 580 credit score. Very expensive. You're definitely gonna pay discount points just to get on the rate sheet. So you got your discount points that might cost you 5,000. Then you have your down payment Let's say this is a $200,000 home. You have your down payment, that's $7,000. Then you have your closing costs, that's another $5,000. That's like $17,000 right there just to get into a house. That's crazy.
That's
When you
crazy.
can actually buy this $200,000 home for $13,000 down payment and closing costs. So don't fall for the 580 bait. When it comes to conventional financing, it's very sophisticated. Conventional is the Beyonce. The guideline says 620, but you need a 720. I'm gonna be honest. It is very, very hard to try to approve somebody with in the sixes with a conventional loan. I have done it before, but that person, they had a lot of reserves. Because with conventional, they don't care if you just had your down payment money. They like to see the reserves. They don't like to see that you was late within the last 2 years, a whole bunch of medical stuff. Like you really have to be, I'm gonna say like a professional, like bankable. You got to be bankable trying to go conventional. That's the word.
You mentioned reserves, and I know like I'm still looking. I got some questions coming up. You mentioned reserves, and many people may not be familiar with that term, because I know that some FHA loans, I've had people tell me, "Yo, I was going to the closing table, and then all of a sudden they want to see another bank statement to see if I had reserves in there to make sure I could cover the next 2 or 3 months of payments." So, can you explain to the listening audience, watching audience, what reserves is?
Reserves is if stuff hit the fan, are you gonna have some money to pay the mortgage? And they want to see that. You want to have that. Even as an investor, I have reserves on every one of my houses before I start, you know, playing, playing. But reserves is very key. Conventional banks love to see it because now it's not like you're forcing yourself to become a homeowner. They like, okay, this person is really prepared to become a homeowner. And I know people like right now they see everybody buying houses, posting houses, and y'all want to kind of, oh, I want to do it. I want to rush it. Patience is a virtue. Like take your time, because here's the thing: these houses ain't going nowhere. People getting older, people divorcing every day, um, people selling, jobs are moving. Like housing is available.
People are dying.
Yep,
Yeah,
yep.
this is real.
Mm-hmm.
And if their kids live up, because I'm in South Carolina, you're in North Carolina, their kids live up north, they don't want that house. They're not coming back to it.
Exactly,
They want to sell it. Um,
exactly.
you posted on your page the other day, and I about fell out. I was drinking coffee, and I was about to sue you because I almost spilled coffee all over myself.
No, don't sue me for that.
You closed a loan 1.99% interest rate. Dude, where they do that at? And first, and then tying back into somebody asking a question, what are your interest rates for the different loans? Now I already know because I've been stalking your page. There's a lot that goes into answering that question as what are your interest rates. So, but tell me, so it's part A and part B. Uh, where they do that at? How you get a 1.99? And then the flip side is if you can, because I know it's a lot. What are your interest rate? What goes into determining that?
So that 1.99, it hasn't closed yet. It's supposed to close when is it supposed to close? It's supposed to close like next week, I think, a week or two. But it was so funny, the guy, he emailed my team and he was like, "Hey, Michael, rates are going down. I want to see if I can get a lower rate." And like my team, like Kay called me and I just bust out laughing. I was like, I'm just gonna tell him he has the lowest interest rate in his neighborhood. Because people like they watch the market and don't really know what's really going on. But that 1.99, I remember like yesterday, like the rates that he was really gonna get like a 2.375. And I was like, hey, let's just wait. Let's wait like a day or two. Mm-hmm. I like to float on my loans because rates is low. And if I can, if something happens, we get a good day, hey, it's a good day for everybody. So on this particular day, rates was phenomenal. I was like, let me go in here and look. And I was like, oh my goodness, he can get a 1.99. I was like, sir, I called him. I was like, I got this great interest rate. He was like, how much is it gonna cost me? I was like, guess what? It's not gonna cost you nothing because you're my friend. It cost them nothing. It was so much wiggle room in there that I didn't have to charge them a discount point, and it just worked out 1.99. I was like, hey man, go to your church, your kids' school, start bragging about this rate.
Yeah.
So that's how he got that, and he's he wanted a lower one. I was like, man, he want the loan for free, I guess, but and then going back to the interest rates, what is my rate? When people ask me that, I tell them right now, like rates is like in the threes. They threes, 3%, because they are going up. But don't get caught up into the rate. A lot of loan officers will sell interest rates too. Hey, rates are low. Rates are low. Rates are low. Rates are really historically low. About 2008, my mom, she bought a house. She was like at a 7% interest rate. 7, 8, 10. It was crazy. Right now, if you're in the threes, you still have a low rate. Because when I got in the mortgage industry, I got in when rates was in the fives. 2018. So, hey, you still have a low rate. Really look at the benefit of it. And a lot of people forget the benefit, because here's the thing, how lender credits work. A lender, and a good lender will tell you. A bad lender won't tell you this is a secret, but I'm gonna tell y'all.
Okay.
The way lender credits work, it's either they're gonna bump up your interest rate. So we're gonna bump it up to give you that money back, because somebody has to pay for that interest rate, the bank or the borrower. Usually the banks put that fee on the borrower. So if you truly are in the bind where you don't have no money for your closing costs, but you still have the reserves, or you need to show that you have reserves, take the higher rate. The higher rate might be right now, it might be 3.5%, but you might get $4,900 towards your closing costs. Right. That's a benefit.
That's totally a benefit. Back when I had a bunch of investment properties and I was refining them, because I would buy my properties, but I was finding properties for like $8,500, $10,000, $12,000, and we'll talk about your investment property here soon. Because I was blown away. It took me back to the 2006 days for me when I was finding houses at that amount. But yeah. I was paying cash, and this is why I tell people you can use your tax refunds, man, to get in the game, man, to change your life, mine, I didn't have an $8,000 tax refund, but I know plenty of people where I live in Winsburg County that get that kind of money, $11,000, $12,000. I was able to buy a house and put in about $3,000 to $5,000 worth of work, and then I turn around and get financing on it. And at that time, man, I was getting rates at 8% and 9%, and I thought I was like, yeah. So when I hear people saying 4%, that's too much. I'm like, are you kidding me? And especially when it comes to, like how you said, if the lender is going to pay the closing costs, look at what you're offsetting it. And then number two, if it's an investment property, you're not paying for anything anyways. It's the tenant that's holding you down. The rent is paying for that. Another thing I want to say before I go to another question here from someone here, reserves. Guys, it is so important. I can't stress this enough. This was one of the reasons why I was headed, well, it sent me to my doom, is because when I had my properties, I was refinancing and pulling all the cash out of it. I was over leveraging. I was pulling out 90% LTV. And instead, yes. Yes, I wasn't leaving any equity in that home, bro. So, but that was mistake number one. Mistake number two was I was not putting away any money in reserves to cover, like, say, 6 months to 12 months of that mortgage, insurance, and taxes, right? So that was mistake number two. Mistake number three, I was taking the money and buying dumb things like Escalades, a long version.
Okay. That was fun.
Because I was on a roll. I had a realtor that was feeding me these houses that were foreclosures. So I mean, as soon as I got one done, he's like, "Hey Sue, go take a look at this one. This is 10,000. Can Here's one that's 19,000. I had a $20,000 credit card with 0% interest. So I went and I put that house on a credit card, and I was turning around and refinancing it. But Mike, here's the thing. Facebook wasn't around. YouTube wasn't really telling people how to do this thing. And I say to people now, there is no reason to be in the situation that you are in because the knowledge is out there. Like tonight, how you're taking time out of your busy schedule to give people the game for free. So I wanted to throw that out there. Let's see. Someone said they're respecting your suggestions just because you're a Dallas Cowboy fan.
Oh, hold on. That's disrespectful.
Are you a Dallas Cowboy fan?
No, what? Hold on. Y'all see this championship ring?
The Eagles, is that what that is?
Yes.
Okay.
I'm a Dallas Cowboys fan.
I'm so glad they traded y'all quarterback, but anyhow, I digress. Someone said, have you ever worked with NACA before? Can you talk about that if you have?
Yes. They actually tried to give me a job over there, but I declined it. And the reason why NACA is not for, I'm just gonna say the middle class. They're not for you building wealth for real estate. They're more so helping you get into a house, but they still control your asset. And with NACA, you have to ask them, can you put a home equity line on your property? The rate is going to be low, like 1.99 probably, but you can't really play ball. You can't, 5 years, 7 years. Hey, NACA, I want to do a cash out refinance. They're not having that. So I tell a lot of people, NACA is not for the middle class. It's a way, they partner with Bank of America. It's a way to get you in the house, but you got to look past the house. You got to really understand the house is actually your bank. How Wells Fargo has a bank, you can have your own bank. And don't let nobody take your equity away from you. That's what NACA, that's what down payment assistance programs, because those down payment assistance programs, they're not grants. They're second liens. You got to pay those back. So if you're thinking, hey, I've been in the property for 11 years, in some cases, they become forgivable in year 11. So let's decide you want to refinance or sell it, and you're banking on making a dollar amount to do what you need to do. They got some of your equity for no reason. And there's nothing wrong with down payment assistance programs, but you got to kind of weigh out the pros and cons and have an exit strategy on how to get out of that down payment assistance loan. Because a lot of people I talk to, they're like, Michael, I want to refinance. And yes, you can refinance out of it, but usually when I do my cash out refinances, I do a no cost, meaning I just roll the closing costs into your loan amount. With the down payment assistance loans, we got to pay back that second lien. Depending on how much it is, hey, Janice, you got to bring money, you got to bring some closing costs. What? I got down payment assistance. Yeah, you got to pay that loan back. So, and Janice didn't have it 7 years ago. She don't got it today. Right. The mindset. Wow. So NACA is terrible. I'm gonna be honest. It's the worst program. It's good for old people though. Like I would send my grandma to NACA. If she called me right now and said, "Hey, I want to buy a house," NACA, my grandma want to buy a house. I don't got time for that.
It's so funny because I'm working on a real estate course for beginners, and I don't even talk about NACA because for those reasons. And a lot of people don't realize, like, I'm not down in the home buyers program either, but get into it knowing the game that you're really a slave to them. And I like how you coined the phrase, like, your house is your bank. You can be the banker with your house, meaning that equity in your house. And I never heard it put like that. And I think with you putting it like that, I know for me, it gives a feeling of empowerment. So why would you want to give your power and authority and your money, your bag, away to somebody else? I like that. Question coming in says, do you take into account medical bills? And what should the DTI, the debt to income, be for getting loans?
Okay, so medical bills. I know right now my company, New American Funding, we exclude medical bills. Big other mortgage companies, I know big banks, like they be like on a trip horse.
Mhm.
But medical bills, you come to me, we exclude them because here's the thing: ain't nobody paying no medical bills. Ain't nobody. I don't care who you are. Hey, charge it to the game. Um, your DTI, you really want to have a low DTI, to be honest. But I ain't gonna lie, I love getting people in the houses, so I max that bad boy out. I max it out, but before I max it out, like I really look at, okay, what's gonna be the cost of your light bill, your cell phone bill? Like I ask those questions, but if it's like one of those things where, okay, I see why the debt to income is maxed out because I had to count 1% of the student loan debt on this FHA loan, and we know you're not paying a 1%. You on an income based driven plan paying just $100. Let's maximize this thing for you.
Mhm.
But the DTI for FHA, you want to be at 45, but you can go to like, if you want to max it out, 50. Conventional, you definitely want to be 43 or below. USDA is a hard 41. Down payment assistance programs is a hard 43%. Um, and the way you figure out your DTI, you want to, what's the formula? You want to add up all your debt plus your mortgage payment. So if you say having a $1,200 mortgage payment, add up all your debt. And no, auntie, you don't have to put your cell phone in there. It's debt that comes out monthly, such as credit cards, car loans, student loans, anything like installment loans and credit cards. And
Would it be
pretty
safe?
much,
Because basically, what I tell people, anything that's already on your credit report. Now, like you said, some lenders take into account what your utilities could be, but a lot of them just take into account the debts that actually appear on your credit report.
yes, yes. In the utility calculation, that's more so really looking out for the borrower. Because
Mhm.
I have seen it where some borrowers, they be like, Michael, I want this house. I'm like, hey, if you get this house at this price point, you are going to be in foreclosure in 3 years. I was like, trust me. And they come back and say, Michael, I'm so glad I listened to you because I'm not house poor. Because as you know, middle class folks, I grew up middle class. Um, we want to keep up with the Joneses, and we got to remember, don't try to keep up with the Joneses. Play your position, play your race, and try not to be house rich or house poor, whatever the term is for it, where all you can do is just live in your house. Like remember, go travel. You want to do things like have that money aside um, to do things, but your debt to income, you add up all your debts divided by your gross monthly income, and whatever that number is, that's your back end debt to income ratio. Congratulations, you got a house.
I love you.
Mm-hmm. Gotta speed that energy in there. You gonna get a house?
I was watching an interview with Ho with Jay Z, and the guys that were coming to interview him, he was like, "Congratulations, you made it." He was basically saying, "You got to this level, you got to me, you made it. Congratulations."
Yeah.
So when you said the DTI, you was like, "Congratulations, you got a house." It just triggered that. Anyway, dude, we got a lot of questions coming in. This is I told you guys this was going to be the talk that you needed to tune into. Let me just take a moment and say that this talk tonight is being sponsored by the SHB International Hair Academy, located in Conway at 1403 3rd Avenue. If you are looking to get into cosmetology, aesthetics, and nails, please give them a call at 843-488-4188. Had to do that plug real quick. Um,
Oh, that's fine. That's what I'm talking about. Support them.
yeah, I had to do that plug. So, oh, someone said my exact thought when buying a house, don't be house happy. I love how you said that. I have a 2012 Hyundai, right? And I love this bad boy. And
Yeah.
I got 5 siblings and we are straight clowns. And we go at each other all the time. And they're like, why are you still driving that car? You can afford to, have so many other things. And I'm just like, I already lived that life. When I had 7 cars in the yard and only had one butt. So I was like, now my thing is I'm stacking up assets to be able to get the real car I want, which is that Rolls Royce. And
Ooh.
Yeah. And I'm like, so for right now, I love my 2012 going to different houses and doing walkthroughs and whatnot. But I'm glad you said that because the middle class guys, I'm telling you, and I really believe this, Michael. I hope it doesn't happen, but I really believe the way we're headed, unless the economy changes, there's not going to be another middle class. The middle class is going to be wiped out. And so, with that being said, we got to be smart with our money. We got to be smart with our investments. You said something, and I never heard this before, and I was like, ooh. I always thought like you know, they say you buy a house, it's an investment, right? But it just depends on how you look at it because really it's you could say it's a liability because you're paying on it. And for most people, it is a liability because they never use the equity which causes it to be an asset out of that house. A lot of people will have a house that's paid off or have $50,000 worth of equity in it, and they're running trying to get a regular loan with 12% interest rate when they could be using the equity out of their house. So, how did you come up with that concept of when you're purchasing a house, you become an investor? And can you break that down just a little bit more for people that are watching? Because I think that if they go into these loans with the mindset of this is my investment property, they will do things differently. They will govern themselves accordingly.
I came up with that concept when my mom brought like how my mom brought her first house. I think she brought it in like 2006. How she was saving and how she was kind of just saying, "Oh, I got to like this an investment." Like it was crazy. Like during that time period, like we were staying with people while she was saving for the house. And then she just said like, "Hey, this house like it's gonna be your house," but we lost it due to the '08 crash. But anyway, um, you wanna like when you buy a house, don't fall in love with the house.
Mm,
Fall in love with the numbers.
mm,
And like you really, I know the average person, they ain't thinking about their numbers. They think, oh, I love these windows, I love the floors, the carpet, the house, like the outside. No, really fall in love with the numbers of it.
mhm,
Understand your numbers. Ask your real estate agent, what's the appreciation? What's the appreciation number every year? Values of these properties every year, or what was the appreciation increase in the last 3 years? Oh, 8%. Hey, times whatever you purchased the house for by 8%. That gives you a blueprint.
mhm,
Um, Also think long term. Like I tell all my first time home buyers, because I promise I love them. But they sometimes they over like they be reaching. They're like, oh yeah, like I'm gonna get this house. Not reaching, but they over leverage themselves.
yeah.
And I tell them don't over leverage. Like especially if you have a young family, and I have a young family. If you have a young family, kids like elementary, middle school, you still have time to just buy that first house, buy that first basic house, right? Stay in it until the second child is ready to go to middle school.
Mm,
That second child is in second grade or third grade. Hey, we're gonna stay in this for 2 years. That way, they're going to middle school year. Middle schooler is going into high school, right? So now, guess what you're gonna have? You're gonna have a ton of equity.
mhm.
Because here's the thing: the the younger kids, that's what I'm gonna call them, the TikTokers. They're gonna be ready to buy houses soon.
Yeah.
And those kids are very intelligent, very. And so they already know, okay, I'm ready to buy a house at 21, 22. Like I'm seeing younger people for the last 2 weeks. My clientele has been kids in their 20s,
Yes.
under 25. And I'm just like, oh my gosh, like y'all about
Yes.
to buy a house. And they're not trying to over leverage. They're like, hey, it's just me and my girlfriend, or hey, I got a kid, I got a young family. So they're seeing, okay, let me think long term. And that's how you need to think with the first house you buy.
Mhm,
Think, okay, what's the exit strategy for year number 5? Are we going to sell it? Or are we going to refinance it? What's the exit strategy in year 10? you got to think long term with it, because if you sell it, hey, cash out, go buy another house, or you can refinance it. That's my favorite thing.
Yeah.
Refinance it, get that money back. Let's say you get 30, 40,000 back. You go to small town USA, you go buy, you go buy someone's house cash.
Mm-hmm.
Hey, my grandma left me this house, man. I don't want it. Okay, cool. Let me take it. How much? 8,000. Okay, cool. I'll buy it for 8,000. Buy that house. Now you buy cash.
Mm-hmm.
Yes, you remortgaged your house, but here's the trick: if you buy a house for 200,000, and in 5 years, let's say you have enough equity in there where once you refinance and pull out cash, your loan goes back to 240.
Mm-hmm.
Don't let it stress you out.
Right.
You can pay a $240,000 mortgage payment. Now you got that cash. Go buy an asset. Let that asset pay your mortgage payment,
Right.
and you rinse and repeat. And guess what? Guess what? Now you got another house free and clear. Let's say your kids, they need to go to college. Let's say they don't want to go to college. Let's say they want to go to trade school. Well, mom, dad, I don't got the money. My summer job didn't pay me enough. Okay, let's pull from this house. Matter of fact, you can go to trade school. Once you get out, you're gonna start your own business.
Mm-hmm.
Oh my God.
Yeah.
Y'all building an empire.
Yep. Absolutely. And it's rinse and repeat. You continue to do that, and that's how you're building your net worth. Your net worth is, um, um, you know, your assets minus your liabilities equals your net worth. So you're absolutely right. And you kind of touched on answering somebody's question, because she said, I bought a house for investment that needs work. How can I do the repairs without using my money? I guess she's asking, how can she get loans? So she bought the house, and I'm assuming, Tiffany, you bought the house and you own it free and clear. And you're asking, how can you get money to do repairs? So in my mind, I'm thinking refinance, or she could do a HELOC, home equity line of credit. What would you suggest, Mike, or even a private lender? You know,
So, it's all those are right. The thing about refinancing, a normal lender, if the house is jacked up, you kind of gotta refinance it on a like for like a rehab loan.
mm-hmm.
I'm gonna be honest. I would not go. You want for rehab loans, you want to go with a lender that specializes in that type of stuff, like a hard money lender, a commercial lender, and a commercial lender. There's somebody that will put a loan in you. They'll lend you for your LLC for a mortgage,
Mm-hmm.
and then that way they'll order the appraisal, see how much your value, and lend to you that way. Or you can go to private money route. Private money, I raise private money. I love it. It's because I'm helping other people get wealthy. I'm getting wealthy. Everybody wins. Private money is a great way to go. Um, it's tax time, so you can say, "Hey, Linda, let me 40,000 to fix up this house," and tell them, "Hey, I'm gonna give you 15% back once
Mm-hmm.
I refinance it."
Yep.
It
So, and I'm glad you brought that up with private lenders. So what would somebody need to do to qualify if they have a house right now, right? They just bought it. They own it free and clear, and they just want the money to rehab it. Understand this: when you're doing private lenders and hard money lenders, typically the interest rates are going to be a little higher, but the exit strategy is either to sell the house or either to refinance the house into a lower interest rate. So what would somebody need to have to come to you if they needed a private money loan from you? What would you require?
okay. So let me go ahead and disclose this now. So what we're about to say, this is not dealing with New American Funding now. So outside of New American Funding, I have my own thing going on with commercial real estate funding, such as hard money, private money. But the main thing I look at credit.
Mm-hmm.
You want to have, we'll take a 650, but I like 700. I ain't gonna lie to you. It's a little safe, but 650 will get it done. Um, you pretty much you want to have an LLC because I only like to lend my money to LLCs. I don't lend my money to a regular person. I lend to LLCs. Um, I want to see that you have done a project before. Um, if you haven't done a project before, definitely like I'll listen to like, hey, how did you acquire the property? Um, and then, hey, give me a scope of work. So if you can give me a scope of work from the contractors, and you have your bid in place, all right, this person's serious. Like they did a lot of legwork up front. Um, on the private money side, when you're trying to raise private money, it's more so you want to show them that you know what you're doing.
Mhm.
Starting out, it's gonna be very hard trying to get somebody to lend you money if you have never rehabbed a house. But your best bet, and this is how I got in the game as an investor. I paid somebody to pretty much come on my first flip to help me and show.
Mhm.
I actually gave them equity out the deal because I was wholesaling before I became an investor, and I just said, man, you know what? Like wholesaling is great, but at the end of the day, it's a job.
Yeah.
And when I get 40, I ain't trying to be no wholesaler. Like I'm trying to be go to the mailbox on the first, get my check, take my kids to school, grandkids to school, deposit the money, pick up Chick-fil-A for them. So with that, you just got to make sure that private money, you understand you have an exit strategy. And then
Mhm.
you just get your attorney involved. You find an attorney that speaks the language because a lot of attorneys, even though they're a real estate attorney, you want to get an attorney that understands wholesaling or creative financing. I have 3 real estate attorneys, and all 3 of my real estate attorneys understand creative financing. Um, and you definitely want to have that. And once figure out the terms, just make sure you handle your business, knock out the house, fix the house, pay them back their money. Because once you handle your business with your private money, sky's the limit. They're gonna
Yeah.
tell their friends about you because people with money have friends with money. Let me tell y'all again: people with money have friends with money, and you show them how to get money. They're gonna tell their friends. They're gonna be like, "Hey, I just invested with Sue, and I made $20,000.
Mhm.
Really, I want to meet Sue. All right, hey Sue, you got another deal? My buddy and I want to come on. Oh yeah, I can find one. Okay, yeah, we want to lend you some money. You want to lend me some money? Yeah, Sue.
And
So guess what?
love that.
Yeah, look, you 100%. You 100% in on your investment properties.
Yeah, absolutely. And so it's funny, but people really don't understand that. And that whole side of investment's been around for a while. One of the things that I have learned about real estate investment is nothing's really changed. Um, other than interest rates. In my opinion, I'm like pretty much, and that's one of the things I love about this thing, is it's pretty straightforward. I mean, there are different barriers of entry, there's different ways when we're talking about creative financing to get a loan done. When it comes to your private lending, are you requiring to see bank statements, or are you just looking at, do you have the money to come into the deal with, and I'm just looking at your credit score?
So we're looking at we want to see 3 month worth of bank statements. We want to see that you have reserves.
Mm-hmm.
Um, we want to see that 650 is minimum credit score. Um, what else are we asking for? The reserves is big. It's big because a lot of people they're like, I don't got it. I just got a down payment. You gotta have the reserves. We're gonna charge you points on the front end. We charging points. I'm not gonna lie to you. We charging like 5 points
Wow.
max. Well, yeah, max. Like it can go up to 5 points max. The interest rate though that we give people, it's between 4 and 5% on investments. But
That's not bad. I'm telling you, for private money, that's not
yeah,
bad at all.
mm-hmm, yep,
At all.
um, yep. So it's pretty cool with doing private money because like if once you learn how to raise private money, you can actually lend your money out to other investors. That way, if you don't have a deal going, you can still make money. Because I tell people money is not made to be sitting in a bank account.
No,
It's made to be working for you.
absolutely.
Uh,
Absolutely. I see a question that I missed. Shifting back to your loan company. What's the name of the loan company again? I'm sorry. Your lender.
New American Funding.
New American Funding. So shifting back on that hat, okay, away from private money. Someone says if their credit is not the best, what are some steps they can take to get their credit better? Now, I want to let you know, I listened to a podcast that you were on, and you said something that was really good. A lot of people tell you you need to keep your credit card payments, they shouldn't be over 30%. You shouldn't charge over 30% of the limit. But you said something that made a lot of sense. You was like, keep it at 15%. So I would like for you to answer why 15% with your credit card spending, and number two, some things that you can do to get your credit together. Because if I'm not mistaken, you work in that arena as well with helping people to get their credit together.
So before I became like a lender, I used to be a credit repair coach.
Mm.
I like real raw credit repair coach. Like I was in the trenches with them,
Mm-hmm.
and I had to get out of them trenches. But
And people funny when you don't get those 30-day lates off and them collections fast enough.
yeah, yeah. But I was working with a lady. The way I got in it, I worked with the lady that fixed my credit. And I was just like, don't just fix my credit. I want you to show me. And at the time I was like in college, I was just doing a whole bunch of stuff. And once like she showed me, I was like, hey, can I come like work for you? Like I could bring you customers. Like I feel confident in bringing you customers and also working the customers. So she was like, no, at first. And I was like, come on. I was like, look, I'm gonna create my own team and just give me like, matter of fact, you don't gotta give me a file. I'm gonna show you what I did. She was like, okay. So I fixed some people uh at the college, they credit, and she was like, okay, you hire. And pretty much like I just start understanding the formula and how the system works. So when it comes to that question about the 15% rule, a lot of people Google credit cards,
Mm-hmm.
how they work, how to keep your utilization. And if you go on YouTube, Google, even talk to your uncle, your auntie, they're gonna tell you something crazy. They're gonna be like, hey, pay it on the first, then pay it on the sixth, then then charge it off and then try to bring it back. They're gonna just tell you something crazy. All you gotta do, pay your credit cards on the due date, for one. You don't gotta pay 5 times a month, just on the due date. After your due date, you want to wait 8 days to reuse it. The reason why, we're dealing with technology. Technology is very slow. And you wanted to give a time to report the new balance. Well, now the trick with the balance is not just one card, it's your total balance. So you want to add up your total credit limits,
Mm-hmm.
right? So add up your total credit limits, times that by 15%. That's the 15% rule. So times about 15%. Whatever that number equals, circle it. This is where you need to keep your running balance total every month. So you're like, okay, I got that. So once you look at your credit cards, you've got your balance. Now you need to add up your current balance. If that balance is over the new balance, you need to bring it down.
Mm-hmm.
If it's under, hey, you great. Somebody's gonna probably say, well, what like what about my different due dates? That's fine. Just remember, pay it on a due date, wait 8 days after. All my credit cards are due at the end of the month. So it helps me out. Like right now, I'm about to get some financing to buy investment property. And I told my lender, I was like, hey, don't pull my credit. Let me pay down these credit cards real quick, man. So I can show you this. So I can show you this 800 real quick. so so I use that same formula. And the thing is, people say, oh, Michael, I want to pay. No, that's not right. I pay all my credit cards off to zero. Here's the thing. We live in America.
Mm-hmm.
America is the biggest business in the universe. The American banking system and the credit banking system have a partnership.
Mm-hmm.
They're not going to disclose this to y'all. The people that work there don't even know. But the people on that level know. So this is how it works. If you pay your credit cards at zero, the banks, and you can check this out yourself, pay your credit cards at zero, your credit score is gonna go up probably 2 to 3 points.
Yep.
And you're like, man, I paid that. Why is it not going up? And then how your spouse do the 15% rule. Your spouse credit score go up 50 points. Why? Because the banks make money off of your interest. The banks are the brokest companies in the world. And they're making money off the interest that we pay them. So the bank is like, hey, Michael paid his credit cards is zero, so we're just gonna give him 3 points. Sue, on the other hand, she left a little bit of interest, like 15%. Let's go ahead and give her a 50-point credit increase.
Right.
We're still gonna charge her just interest.
Right. But you know what else too, Big League? What I came to find out is like I had a credit card, I don't know, about 5, 6 years. I got a couple credit cards, but one of them I had like 5, 6 years, and I was never, if I used it right, I was like paying it off real quick. Because back in the day, everybody says pay everything off quick. Well, what that was doing was showing them that I probably wasn't good with, managing credit. And then plus they weren't making any money off of me. So when I went in to ask for, a credit card increase, they're like, no, because you don't use it. But on the other hand, I have this other card that I'm using religiously. I mean, religiously. And every time I go in and say, I want a credit increase, it's like, boom, here you go. Here you go. Because I'm using it. And I'm showing that I know how to handle credit, but I'm also, allowing them to make a little money off of me. And would you say that that's very important? A lot of people aren't taught that. And that's only going to help your credit get better as well, right?
Yes, you want to pay the bank's interest.
Mm-hmm.
I know a lot of people like, man, nah, look, we in America. America is a business. The banks make money off your interest. So just think, all right now, credit is over cash. So cash is king, but credit is queen. What's the most powerful piece on the chessboard? The queen. She can go up, down, everywhere, sideways. The king can just only go straight. Once. He can't skip 3. He gotta go straight once, back once. The queen can jump 5.
Mm.
So that's how credit is.
Mm-hmm.
So you need the cash, but that credit, you have the credit. The bank is like, okay, you lendable, because the banks, they like gambling. Mm-hmm. They are betting against you. When they give you that loan, they're like, oh my gosh, I hope Sue, I hope she miss a payment. and they lend you that money. They're like, yeah, miss a payment, or hey, don't pay it off in full. Cool. I ain't gonna pay it off in full. Give me that credit increase though.
Yeah.
Because now what you could do is, and I know Sue, you gotta have somebody else talk about business credit, but once you get ready and get your credit right to you're in the 700s, and you with your personal credit, you want to show that you have a total limit of minimum $5,000. Mm-hmm. If you add up your total credit card limits and it's over 5,000, and you're in the 700 clubs, if you don't have an LLC, please go create an LLC. The reason why, who was getting the most money during this COVID-19 stuff?
Businesses.
America is a business, everybody. They don't care. The government does not care about you. But guess what they care about? They care about their businesses.
Yep.
And guess what business the government cares about? That they're in, but they're not in. Real estate. Mm-hmm. And when I say that, I have a contract with the government. It's called Section 8, ain't never late.
I love it.
Go get a house. Don't put no regular person in there.
I love it.
Put Keisha and LaShawn and her kids in there. They need housing. Mm-hmm. And then here's the trick. Educate Keisha and them.
Yes.
Educate them. Like, I got to set up my property management. I tell them, hey, tell all the tenants of my properties I'm having this course, but don't tell them I'm the owner. Just say, hey, it's a course. Just educate them.
Mm-hmm.
So now Keisha and them, they're like, oh yeah, this is how we do it. Okay.
Yeah.
Come back to you.
Yeah.
So going to that other question, what was the second question? About what things you could do to boost your credit?
Yes.
To boost your credit, keep your credit card utilization down. Don't be late. Don't be late on installment loans. I know with the student loan stuff, a lot's going on with COVID. Stay on top of them. Tomorrow, call your student loan service and ask them, hey, where I'm at, what's my status with the COVID-19 stuff? Am I on a COVID plan? Or I'm not, can I get on it? Okay, if the COVID plan is off, um, when would that be off? Okay, I'm gonna call back before it's off, just kind of get a payment plan ready to go. With medical bills, a lot of hospitals have financial assistance plans that you can get on. After you get out the ER, you got to go to the emergency room for some reason. Day or two after, or once you're feeling better, call the hospital. Say, hey, do y'all have a financial assistance plan? I would like to get on it. They're gonna ask for your tax returns, bank statement, pay stubs. They're gonna ask for all that stuff. Get it to them so they can pay your medical bills for you. Um, when it comes to disputing stuff, try not to dispute everything, especially old stuff, because that older stuff is actually the age of your credit. You get rid of that stuff. And I just had this happen to a client. He was like, man, I want to go through credit repair. And I was like, look, man, don't do it. He was like, Michael, I got you. I already paid them the money. I was like, okay, tell them. And he went through a bigger company. He didn't go through like a smaller company. He went through a bigger company. I was like, tell them don't dispute none of your older stuff.
Mm-hmm.
They did backwards.
Mm.
All his older stuff gone. So he's like, Michael, my credit score dropped. I was like, yeah, that was your age.
Yeah.
You have a baby credit score now. I was like, that age of credit works. So if you have older stuff that was like in collections or just older stuff just up there that's already been paid, don't touch it.
Yeah.
Keep it. Credit repair is really good for educating you on removing things that are not legit. And a lot of people, I'm gonna do credit repair. I was late, but I'm still do credit repair. We gotta be mindful. We have technology. We have those companies have payment systems. They
Mm-hmm.
keep in, they keep up with when you made your payment, when you was late. So hiring credit repair to remove something that you was really late on is a disservice to you and the credit repair person. For credit repair, you can focus on medical payments. That's good. Focus on boosting up your credit. Try not to get too many loans because loans don't really help. The credit revolving helps your credit score. And the more credit cards you have, the better. You want to definitely try to get more big bank credit cards, such as like a credit union. So my favorite credit union is Navy Federal Credit.
Oh God.
Um,
They're like, it's like God, then family, then Navy Federal.
yeah, exactly. Because they will hook you up, and they will actually like their credit cards. Once you get one, the utilization, like the limit, will be so high. Like they're like they want to see you win.
Mm-hmm.
So try Navy Federal or try credit union first, and then you can try like your big box banks. I will first try a Chase over Wells Fargo and Bank of America. Um, After Chase, I try a bank of a not Bank of America, but after Chase, try American Express. They're a good credit card to have because you want to remember that play I just told you. If you the goal is to transform from using your personal to go into business.
Mm-hmm.
Because a business credit, it does not show up on your personal at all.
Mm-hmm.
At all. Like if I go buy a house in my personal name, the banker is not going to see none of that business stuff because it's business. And also, if you buy a house and let's say you own rental property, put the rental property in your business name. If you have a mortgage, try to get the rental properties in a commercial mortgage. All commercial mortgages is, hey, your LLC is the owner of this house.
Mm-hmm.
That way, whenever you're ready to go buy a house, the underwriter does not have to count those mortgage payments against you at all.
Right.
Because your business is making the payment, not you.
Right.
And that's how you free up your debt to income without selling the house.
Gotcha. And I know that some people are leery about putting it in a business name in an LLC. But it is, some banks do take into account if you do have more than one residential loan on your credit, they'll take into account sometimes 75 to 80% of whatever that rent is that you're getting from that tenant that's in the house. But that's where you got to do your due diligence, and you got to call these lenders and ask questions. And that's why I wanted to have you on the show, because, you know, like I said, I feel like you have a lot of programs that you can actually slide people into. And number two, it's not about the money with you. You sincerely want to see people win. And those are the people I like to connect to. Not the people just, I'm just trying to get this dollar, I'm gonna just do whatever I gotta do, I don't care if you make it. Because it's not too many lenders that's gonna say, hey, that's too much house for you, even though you qualify for it. That's too much house for you when you factor in, you know, your utilities, and you might be paying for private school for your children, you know, because a lot of times people are not thinking, they just see, I got the big house, the bank said I can get it, I'm gonna go get it. And then 3 years later, like you said, you know, they're foreclosure. So I want to thank you. We've gone over an hour. I could talk. Listen, this is my language. I love this. So I could talk forever, but I want to, you're doing this for me for free, and I appreciate it. So I want to respect your time. In closing, is there anything you want to say? And by all means, please tell people how they can reach you, because this is the guy you guys want to do business with. So take it away, Big League approved.
So thank y'all for first, watching this on Facebook. Thank you, Sue, for having me. It was an honor. You're like a super investor out there in your market. Y'all can reach me. Facebook page is Big League approved. You'll see me with the red suit on, looking all smooth like Denzel, Michael B. Jordan. Just looking smooth like I could be on Cree or something. but yeah, y'all can connect with me on my Facebook page. I work off appointments. My team, we focus on Virginia, North Carolina, South Carolina, but we could do all states. We have a multi-state team that can kind of help us out. Just reach out to me. I am going to be doing a 6-week course, April 1st, a 6-week course. You got to pay though. It's going to be $500. $500. We're only taking 20 students. Follow me on Facebook. I add you. This course is going to be bigger than McDonald's.
Come on now.
Your college, university, they ain't going to teach you how to get this bag. We're going to teach you how to build your credit, how to acquire business credit, how to acquire your first rental. And then I have my general contractor. He's going to show you how to get estimates, how to look for, how to look at like the estimate of a project, the contracting part of dealing with contractors, because a bad contractor can cost you a lot of money. So this course is going to show you from A to Z how to get into that first rental property or that flip. We focus on rentals because that's where the wealth is at. But this course is going to be big. Definitely look out for it. It's going to be $500. It's going to be a 6-week course every Thursday at 7 p.m. to 8:30. Y'all going to have homework, and it's going to just help you build wealth, because once in the course, we're going to show you how to apply for business credit. And once you get the business credit, you can actually use it to buy houses. I use business credit to buy all my houses. I'm scared to use my own money. I use my own money to buy bull, like Jordans and Louis. But I use other people's money to buy the assets. That's how y'all gonna learn. But yeah, just connect with me. I want to see everybody win. You don't have to be middle class. You don't have to be poor. About 8 years ago, I was sleeping on the floor at my cousin's house in Knightdale, North Carolina. And he had like this cat, and they had fleas. So I had fleas on me, sleeping on the floor. around this time 8 years ago, and I made it out of it. I have bad credit. You all could make it out of it. And then also, I want everybody to think about using real estate. Talk to your friends. There's nothing wrong with working and partnering with people.
Mm-hmm.
Because you guys can make a lot of money. It's tax time. If you and your friend, y'all know y'all getting money and y'all, tired of that job, tired of being broke, tired of living paycheck to paycheck, call me. I'll show y'all how to put together an LLC,
Mm-hmm.
how to get a mortgage for it, and how to build wealth. It's not short term. You got to think long term.
Yeah.
It's all about long term with real estate. It's not, oh, let me make this quick. No, it's long money.
Yep.
You got to think long term. You think long term, you're going to be rich forever. Like Rick Ross said. But that's it.
I love it, man. This amazing, y'all. I'm encouraging y'all to go out and get his course. 6 weeks and dropping all that information, how to get the business credit, the LLC, how to talking to the contractors, negotiating that. Um, go get the course. Put it on your credit card. You can write it off at the end of the
You can.
Yeah. But matter of fact, take a part of your tax refunds if you got that. If you're getting student loan money, put it aside, do what you gotta do and get involved. Michael, big league approved. Mackenzie, thank you so much for coming on. I really appreciate you, brother. I'm looking forward to doing business with you myself. So
Me too.
yeah. Guys, he is Suham approved. Y'all know I don't just bring anybody on the platform. So he's Suham approved. Definitely check him out. Until next time, I think that's about it. Y'all can check out what we offer at suham.com, sueham.com. Until next time, remember to live, learn. I'm messing up my slogan. Remember to live, love, learn, and laugh. Don't quit. Follow your dreams to success. Thanks, Mike. Peace.
Peace.